Hello and welcome to this video. In this video, I'm going to share 5 ways to maximize your buy-to-let profit. Very important for you to do this because obviously you're buying properties to make profit and as well as to make capital appreciation. So it's very important for us to understand what are the 5 ways we could maximize profit for our properties. So if you haven't done this yet, if you've got your properties on your name, instead of a company. So think about how you could move it from personal to company. Again, that will depend on how much money you are earning in a yearly basis. So, and again, speak to an accountant who will be able to advise you whether it's advisable to move your property from personal to a company. So if you haven't started yet, I would advise you to actually structure your buying strategy or your property investment acquisition into a company structure. The reason why it's important for you to do it in a company structure, again depending on your income, is you have a tax relief on your interest rate that you're paying on the mortgage, and you can claim so many expensive using a company structure. You could even drive to see your property, you could deduct that as an expense. You can have a meeting with an investor or a business partner. Again, you'll be able, as long as you can justify it, you'll be able to use that as a expense. So very important, structure it that way, and that way then you'll be able to claim so many expenses in your property investment component. And if it's on your own name, the reason why it's not advisable to have it on your name is basically is because there is no mortgage interest relief. I think the government has phased it out now. I think 2021 was the last year you'll be able to take out your mortgage interest as an expense. So they phased it out. So, and again, that has literally obstruct lots of landlords and cause some of them to actually sell their properties, because what they realized is they're not making that much money anymore because they cannot claim back the interest that they pay in their mortgages. So very important for you to structure your business in a way that you'll be able to claim all these expenses instead of buying it on your name. So very important. And also, you may be aware this has made lots of landlords to move their properties in a company structure. So very important. The second thing you have to think about if you want to maximize your buy to let is to remortgage at a lower rate. So if you remortgage at a lower rate, it means that you have less interest payments to make towards the property. How you could do this is to find a mortgage broker who's got massive exposure in the market, right? And that would allow them to actually go out there and look for the lowest or cheapest interest rate out there that you could take advantage of. And again, with this example, you may be able to pull some of your investment back out if it was time to remortgage. And also, depending on your risk appetite, you could go for 2 years mortgage or 5 years. I like to go for 2 years mortgage because then I know after 2 years I may be able to remortgage, pull some of my investment out so I can buy more properties. Again, if you're one of those investors who are not really rushing and you got enough money to actually hold into your properties, you can keep it for like 5 or 10 years fixed rate. So it's entirely up to you. And again, that depends on your risk appetite. But whatever it is, make sure you get a lower interest mortgage to help you reduce your interest payment. Again, if this video has been helpful, don't forget to share it with family and friends so they can learn from it as well. So the third thing you need to think about basically, again, is to get a best tenant. I've been emphasizing this in my previous videos. Very important to get the best tenant for your property and keep them in there, okay? Because if they move out, you have to do a bit of TLC, you have to have a void and all that sort of thing. So it's better the tenant stays in the property rather than them moving out. So very important, vet them, make sure you got the best tenant for your property, and also ensure that these tenants are going to be staying there for a very, very long time. And again, we have golden rules that we normally talk about to ensure we've got these tenants to actually stay in the property a long time. One of these golden rules could be buying a minimum of 3-bedroom house, because what happens once you bought a 3-bedroom house, the tenant will tend to stay, right? They will move out because the house is big enough in case their family extended. But where if you got a 2-bedroom or 1-bedroom flat, once they've got one child or second child, they're moving out because the house is not big enough for them. Again, buying a 3-bedroom house is very, very advantageous, because then you know they will stay there for a very long time. And the fourth thing you need to consider, if you haven't done this already, consider short-term lets. Short-term lets is literally booming at the moment, because what investors have realized that buy to let is not giving them the cash flow or the return on investment that they require. So most of them are using the houses now as on a short-term let basis. So what does that mean? They will do the properties up and do them as Airbnb, so that people would go out there and use them in a short-term basis. Could be nightly or could be weekly, whatever it is. That way they got better return on their investment and less repair and maintenance also. So consider that if you haven't done it, especially if your property is in a touristic city or town. Again, that could be a massive way you could generate cash flow and get all your investment back as quickly as possible. The fifth thing you need to think about is basically look for opportunities to invest once you've started having your cash flow, once you've got your capital appreciation from the property you've bought. Look for opportunities to invest. If you don't have enough money to invest, you explore other strategies like rent to service accommodation, or lease option agreement, for example, and ways that you could joint venture with someone probably who's got the money but don't really have the time. You can then, if you've got the time, you can then add the time in. You can then do the legwork because you've got that time and get the property investment stuff going. So these are the ways that you could maximize it. Number one, you have to ensure you understand how you could buy your property. Is it on a company name or personal name? And again, I would advise you, I'm not an accountant, I'm going to disclaimer that, but with my experience, most of my properties are under a company structure, because that way I'll be able to take advantage of the interest rate relief. And then obviously remortgage the property on a lower interest rate so that you save a bit of money there. Take the best tenant for your property, secure it, have a best tenant, then keep them there for a very long time, and consider short-term let if that works. And again, if you consider that will give you a massive net cash flow in the long run. And again, once you've got enough cash flow or you've got your capital appreciation, you've pulled some of the investment out, think about opportunities to invest so you can build your net worth. It could be buying another buy-to-let property, it could be joint venturing with someone who's got money but hasn't got time, so you can work with them. Or actually, you could consider investing in rent to or rent to service accommodations. So I really hope this video has been helpful. If this video has been helpful to you, don't forget to share it to family and friends, and hit the like button below. Subscribe to my YouTube channel for more of these amazing tutorials. Thank you so much for listening. I look forward to sharing the next video.